I'd rather just find out, whether you think the Fed's on the right track here. I mean, the credibility's gone from the transitory period. Now they're, dead set to just keep going and going and going. So I don't know, that was a bad move back then. They had no clue. They in a better position now? You think they ought to go another 2, 3, 4, 400 basis points? Or does the economy already get the message?
We'll have to see. I don't think the economy's yet digested the inflationary forces, particularly wage price spiral that we're seeing. It does take time for monetary policy to affect the economy. It works with a lag. My guess is they may temper, but I don't think they're going to completely abandon the idea of continuing to raise rates. We still have inflationary forces. Now, I'm pretty sure that Mr. Powell's press conference after the next meeting will not be as exciting as Kim Kardashian's actions that have been taken. But look, we have an inflationary problem. We are the lead central bank in the world. We have to demonstrate that we will deal with the problem even if we created that problem in the first place. And I'm pretty sure they're hell-bent on doing it.
What kind of landing are you expecting? Let's say you're on one of them single-engine planes, and you expecting like one wheel, the other wheel's gone, or what kind of landing are you expecting right now? Could it be a 3-point landing that you don't even notice still?
I doubt it. I mean, I think Druckenmiller, I'm on the same wavelength pretty much. I don't know how severe this will be, but I think it's likely to be sometime in 2023. Look, enormous excess was created by keeping rates at zero bound for too long and by not reining in the balance sheet. And we're seeing the reverse of the benefits that did for investors and for companies. And so you take this away, you're going to have strains in the system. In terms of what happened, I want to just mention what happened with Credit Suisse.
Okay.
We're looking at CDSs as we were getting in 2008, 2009. It's important to pay attention to them. I'm not saying this is a like situation, but it is an indicator of stress. We saw it across the board on every financial institution, Merrill Lynch, et cetera, Lehman, and so on. So I do think there's a signal here that people that have over-leveraged or been unwise in assuming that interest rates will stay low for the very longest time and forever, we're going to have some real fissures in the system. And it's going to scare people. I don't think it's the same kind of situation as 08, 09, but we're going to see these things pop up every now and then. And I think we have to be careful not to exaggerate them, but at the same time, pay attention to them, Joe.
Yeah, well, when we saw that, what do you make of that bizarre move from the Bank of England? That was a quick pivot. And there was a reason for it, pension losses, bond losses. And we hope that dislocation doesn't happen in a bigger setting. Is this the beginning of some dislocation in a bigger setting that you're seeing with Credit Suisse, or is it Credit Suisse?
Look, what they were doing is it's basically a leverage mechanism, the LDIs as they're called, to try to obtain better yield. And this always happens when rates are at the zero bound. You begin moving out the risk curve. We see it with insurance companies as well. So let's see how people can rein this back in. In their case, it was an exotic instrument, and they were playing with pension funds, which they should not have been. And we're just going to have to see if that's replicated somewhere else. I don't think it will deter the Fed from continuing to move in a way that results in the inflationary pressures that are in our economy right now.
Hey, Richard.
It's an indication, Joe, of other things that are likely to pop up, and we're just going to have to see what price is paid for, again, having started this process. Ben Bernanke, by the way, started the process of using the balance sheet and hugging the zero bound. And now it's gone to such an extreme, it has to be brought back in, and that'll be painful.
Shepard Smith here. Thanks for watching CNBC on YouTube.